Hey, what's going on, everyone? Nicholas Merton here from Data Dash, and today I want to spend a decent amount of time talking about something that's been on my mind as of recent. The next few days we'll be coming up on the 1 year anniversary of the Data Dash channel, and boy, not only has it been a change for my life, so thank you guys so much for the continued love and support, but along with that as well, it's been a massive change for cryptocurrencies. I mean, we've seen cryptocurrencies turn into what was a relatively small market into something that the world can't seem to ignore. So today I want to talk about a recent piece of news that's gotten me excited and also correlate it to a mistake that I think many people missed out on where there were clear early signs of back in mid-2017, which led towards a very optimistic market. So what I want to talk about today? Well, I want to talk about what was the recent announcement of the CBOE, or the Chicago Board Options Exchange, recently submitting an ETF proposal to the SEC. Now, this isn't the first time that the CBOE has done this, but it has been the first time since the gates have reopened at the SEC to take in Bitcoin ETF proposals. They actually had told all companies and different financial organizations who had ETF proposals to shut down their operations. They weren't taking it back about a year ago, and then they've recently reopened it this year. So with not only VanEck doing this, but with the CBOE coming forward, we see that there's much more opportunities arising with these ETFs. But I want to talk about why I'm extremely excited with the CBOE's proposal over that of other organizations. So it's not only a matter of status in the financial space, it's not only a matter of the timing where things are becoming much more matured, but the CBOE itself has a very steady approach, a lot of safety net features in their proposal that also are going to give it some extra legging in the sense of being able to actually possibly get past not only sometime later in 2018, but early 2019. And even just talks about this, guys, is something that we cannot ignore, because if this is anywhere close to getting approved, this is going to lead towards much more opportunity and much more liquidity coming into cryptocurrencies as a whole market. And again, you've heard me ramble on about the ETF, so I won't hold you guys up in that sense as to why it's important. I think most of us get it, but it's a question of whether or not it can happen. So if you guys want as well, before we dive into these articles, which do a much better job of summarizing this 53-page proposal, just want to let you guys know, you guys are welcome to look through some of these different proposals that have been sent off. Again, this is been around for about a few weeks now, generally with what they're proposing. But again, you guys can go look through the documentation yourself, see what they have. But we're going to go ahead and really go through the major headlines here. So late in June, there was this proposal that they had sent off, and within the proposal, we found that there was a lot of interesting things. They not only made a case for the maturing of crypto markets, the fact that we are in a time where there is much more liquidity than there was, say, a year ago. We really have to take into perspective, liquidity has definitely increased. But along with that as well, that we have started to see much more regulation, much more KYC and AML standards to make sure that there's not anything fraudulent going on in this space, and it's more active trading and speculation in the sense of seeing where these cryptocurrencies can be valued. But along with this as well, there's some really good standards built into the ETF. For example, this is going to be a 25 Bitcoin ETF per share, meaning basically that each ETF share you want to purchase is going to be 25 Bitcoin. Definitely not something that an average retail investor is going to pick up. We've talked about this as well with the VanEck ETF proposal, where it's pretty much going to be something that only institutions can start off with. And that's pretty expected. The reason being is because in this case, they don't mind, as the SEC is a regulatory agency, they don't mind so much if institutions lose money trying to speculate. They care much more about protecting retail investors in that case, or at least that's what they claim in this sense. So no matter what you believe in that sense, if it's more of just helping out the wealthy guys, no matter what, they're meeting the standard here. This is something that an average retail investor is not going to be able to fit into their 401k unless they've definitely saved up a lot over the past few years and maybe can buy one share. But along with this as well, a big factor that I think people aren't factoring in here is the insurance policy behind the ETF. They've been talking about how within this ETF proposal, if it were to go through, they're not only going to go about purchasing the proposed amount of Bitcoin behind each share, so it's going to actually be liquid, but along with that as well, having not only high security standards for it, but also insurance coverage. This is something that the SEC has been very worried about, because no matter if it's retail or institutional investors, they're very worried that with all these hacks in cryptocurrencies, that the CBOE, just like anyone else who would want to submit a Bitcoin ETF, has the proper safety measures in place to secure trust for investors. And what I mean by this is the fact that, let's say, for example, the CBOE gets, let's say they were to hold $500 million worth of Bitcoin. If that were to be hacked tomorrow, that would leave a major dent because the underlying asset is gone. The ETFs are illiquid anymore. They don't actually own the asset underlying. And because of that, that would be bad for the investors. Well, in this case, they're going to be providing up towards $25 million in primary coverage and $100 million in excessive coverage for the ETF, as well as offering the opportunity to increase coverage depending on the value held by the trust. So this is really, really exciting stuff to see that they've got this kind of protection. I have no doubt that they will already have a good sense of safety measure where this won't even be a question in this case. There's a lot of great ways to store cryptocurrency safely, and it's pretty much impossible to just guess the private key so long as you have it in a secure and safe place. So in this case, having this kind of insurance, though, does at least bring up some extra legroom and support for a potential ETF proposal to actually get passed, because this was one of the SEC's biggest concerns. And along with this as well, again, they've been talking through and through about not only how they're going to be having a more of an institutionalized ETF, they're going to have this insured protection, but again, how the market has matured. And this goes back as well. They've been actually talking, if we go back here to this article over here, this has been pretty much the tone of the CBOE for the past few months, since all the way back in March. And the reason being is because they understand, working as a futures exchange here, they understand that there's not only been much improvements in the cryptocurrency space, but along with it as well, there have been issues and flaws in traditional commodities markets. In fact, they even claimed if you look at currency or the gold market, it's probably more fragmented than crypto. I mean, you've been having these kind of what seem like very wild claims coming out, but I can say in some regards, it's something you have to take with a grain of salt, but can be true in many times. There have been reports that gold and silver have been heavily manipulated. Again, you're going to get varying opinions on that. But what I want to talk about as well, and this is something that I think the SEC is going to finally come to a realization on, is that the more exchange traded products that you have for these different types of stocks, commodities, currencies, and in this case cryptocurrencies, it brings extra liquidity to the market eventually. Because I don't mean to say that cryptocurrencies aren't mature until these come out. I'm not saying that in any way when I say mature, but when you mature markets, in a sense, what I mean by that is bring other ways for people to engage in it. You open it up to a much wider audience. A market is much more liquid and much more seen as a legitimate market when rather than 2 million investors, there is over 50 million or 100 million investors, or hopefully hundreds of millions of investors. And in this case, I think this is what we're going to see here. And I can give you a good example here. We talk about the GLD ETF for gold. This was the first actual ETF for gold, which allowed a wide variety of investors who traded outside of futures markets or invested outside of futures markets to, and as well as Forex as well, to get into gold markets to buy precious metals. And we can see here, this is a great indicator that I recommend you guys use from time to time. It's a decent measurement of being able to tell the increase of liquidity into markets. It's what's known as the price volume trend. And you can find it here on TradingView. It's this blue line down here. I'll go ahead and increase it a little bit so you can see it much more clear. But as we can see here, the price volume trend has indicated that since the GLD ETF came back here in mid 2015, or excuse me, early 2005, we can see here that there's been a major increase in the liquidity here, in the volume, as well as the price of the underlying asset. And we can also see as well that this isn't just in the ETF. We can see it here as well in the gold trading volume for futures contracts. So we can see here on the side we've got millions of contracts, and whereas we were trading about 20 million in this case for gold contracts, we're now trading anywhere close to around 73.5 million contracts, much larger, more than a threefold increase and jump in futures volume for gold. And again, this is even when gold's price isn't really doing too much. We haven't really seen too much of an uptick since back in 2011. So this is really exciting to see that, again, it's proven time and time again that once we, open up these markets, these concerns start to dry up. It's just a matter of making sure you have the right insurance policies, just like how you'd want the gold stored in a proper vault. And I think that the SEC is going to realize that there is a variety of new measures that people are starting to learn they can take in order to secure these underlying cryptocurrencies. It's based in cryptography, and so long as you can go about storing it in a cold storage wallet or doing maybe, for example, what the Winklevoss twins do, where where they I think they rip up a paper wallet and they store it in different vaults around the world. You can actually have a very secure means on something as unsecure as a paper wallet. So very, very fascinating stuff. But I want to go ahead and wrap up on two last things here, guys. There's also a website as well where you can go about submitting comments, and people have already done so. You can actually read through some of these, and you'll get a mix of opinions here of individuals talking about this talk of an ETF proposal, and you can actually go submit yours. And if you guys do, just put a lot of decent thought into it. If you don't have much to say, probably not good to say anything at all, but in this case, I'm thinking about possibly submitting a little bit of a note myself, and I'll obviously share that with you guys if I put enough thought into it and write it up. But anyways, the big thing here that I want to focus on, guys, and why I have the chart up here like I did at the beginning of the video. I remember back in the first few weeks of starting my channel during both the mania of $3,000, but also the initial first serious correction we had seen since the earlier parts of 2017. Many people thought after this run-up that cryptocurrencies were over, that there wasn't anything to look forward to. But one thing that was starting to become talked about at that time period, during this corrective period where everyone was fearful of cryptocurrencies, was talks of the CBOE and the CME creating Bitcoin futures contracts. This is something very, very early in the works. It was talk not so much of those organizations launching one, but obviously it was expected if there was going to be futures contracts, it would be under those large names. And many people would have told you you're crazy to think that you would have futures contracts, well-established futures contracts under large names for a market like cryptocurrencies. But during that year, we saw the most unprecedented bull run in any market ever, period. It was one of the most amazing run-ups we'd seen in a given year period. And it was all due to the fact of not only growing adoption and realization, but along with that as well, the talk of Bitcoin futures contracts, which we inevitably got. And the way you can tell that is it peaked out right up here when the futures contracts came out. It was a buy the hype and sell the news. But even since those talks, we have made major leaps forward. It's just that a lot of this price action was definitely in a hyped up period. It came a little too quick, too fast. But it wouldn't be hard to think that this year, because we've already had futures contracts, because we're seeing much more regulation in the major markets where cryptocurrencies are traded, such as South Korea and Japan, as well as the United States, that we're not only starting to see a much more well-regulated market, but also a market that could be ready for a much larger product. So I've got to ask, what do you guys think about this? I would love to hear what you guys think down in the comments down below, get a discussion going. Until the next video, everyone, thank you all so much for watching, and I'll see you guys in the next video. Stay tuned.